Good morning, good afternoon, and good evening, and welcome to this week's episode of Maconomics. I'm your host, Ross Mack, and I'm here to try to help you get to the bag. We got a new caller calling. Talk to me, what you got?
Hola, Rosmac, ¿cómo está? Mira, tengo miedo, okay? I'm scared because this coronavirus is driving everybody crazy, and my portfolio sube, baja, up and down. Right now, it's down. The NBA canceled their games también. I mean, Dios mío. Let me know what's going on. I'll talk to you soon, okay? Ciao.
Man, great question, man. I think if you watched my Maconomics for 2 weeks ago, you would have seen that I tried to address the impact of what coronavirus would mean, right? Coronavirus, at the end of the day, is something that is uncertain. We don't necessarily know how well we're able to contain it. You're seeing Italy literally are closing down the entire country. You're seeing other states being quarantined. You're seeing presidential candidates actually slowing down their campaign trails and canceling trips. And you're seeing that impact on the stock market. You're seeing airline stocks year to date being down anywhere from 25 to 45%, right? People are scared to travel. People are scared to, take public transportation. You're also seeing rental car companies going down, right? If you have work trips not happening, now people are not renting cars, right? You're also seeing cruise line ships being down. They're down about 50%, right? So this uncertainty is impacting everyday businesses on a profitability standpoint. And that's what's going down on the negative side, right? But on the positive side, you're seeing other things that the government and the Fed are trying to inject to give consumers a little bit more confidence, right? You've seen last week the Fed actually cut rates. What does that mean? Well, for a second, it actually looked good. People were thinking, okay, that's more money in our pockets. We can borrow for cheaper. That means more money for our everyday lives. Now we can spend more money, right? That's effectively what the Fed is trying to do, to inject some type of stimulus package into the market. Then we saw that actually had a little negative impact on banks, that being kind of, the commercial banks, Citibank, Bank of America, Wells Fargo, because at the end of the day, they're making their money off mortgages and things of that sort. So the lower rates, that means they're making less money. However, then you had a whipsaw. Then earlier last week or earlier this week, you had Saudi Arabia and Russia. They failed to come to an agreement. You had oil prices plunge like 30%, the most that it's been in decades, right? And reason being, they couldn't come to a consensus on trying to cut production. But what does that mean on an everyday basis? It was more uncertainty. Now you had more people selling. So here you're seeing the market going up and down. And just earlier this week, now you had President Trump trying to once again figure a way to try to combat this and get investors' confidence back up, right? So what is he saying? Now he wants to cut payroll taxes. At the end of the day, that's also going to be something in the short term that should give people a little more confidence. But at the end of the day, there's still a lot of uncertainty. You have oil being very choppy, trading up and down. And more importantly, coronavirus, we have to really figure out if we are able to find a way to contain this.
A little under the weather here, but I'm not worried about myself. The coronavirus has the stock market plunging. And honestly, I don't know what I should do right now. Should I buy, sell, see a doctor? What should we do with our money with the stock market going all kinds of crazy?
Hey, bro, at the end of the day, I'm going to tell you like Warren Buffett would tell you. Be a long-term investor, right? Because over the course of the next 20, 30 years, this little hiccup in the market due to coronavirus or the oil price wars or whatnot is going to be forgotten, right? Because at the end of the day, I grew up shopping on the clearance rack, and that's the same way I look at the stock market anytime people are panicking and selling off, right? So with that being said, I'm going to look at the stocks that are the least impacted by coronavirus, right? Sure, coronavirus is going to impact the travel industry, airlines and whatnot. But is that really impacting Google, Apple, Tesla? You know what I mean? These big, large names that are down 10, 15% from their 52-week highs. So at the end of the day, bro, I'm looking at getting in and getting stuff for the cheap, for the low. So I'm going to be looking to buy anything that I believe is a strong company from a fundamental and technical standpoint that is just actually been oversold because people are panicking. Right now, you got a lot of people panic selling. People are uncertain. Sure, we don't know what coronavirus has to offer, but is that really going to impact, certain other companies? Now you have to ask yourself, what about the names you currently own? They're down 10, 15%. Do you like those names? If those names aren't truly impacted and this is just all oversold because people are panicking, then you say, yeah, you know what? Let me actually buy more of that. That's what you're going to get dollar cost averaging. That is when you buy something for the low to now actually make the price that you own it even cheaper. So if I own something at $200 and the price dropped to $100 and I buy more at $100, well, on average, I'm probably owning that stock at about $150, right? That's dollar cost averaging. Because at the end of the day, man, we're trying to buy for the low. Warren Buffett got a great quote, and that's saying, be greedy when people are fearful and be fearful when people are greedy. Right now, coronavirus might be real, but a lot of people are being fearful. So now's the time, if you like companies for the true fundamentals of them, to buy it. Buy it for the low.
Quick disclaimer, this your boy Ross Mack. I'm just trying to elevate and educate. Damn sure ain't trying to play A. So if you lose some money fucking around with me, it ain't my fault.
Yo, it's your boy Ross Smack, man, and thanks for tuning in to Maconomics. But I'm gonna need you to stop what you're doing and go download that Maconomics 101 right now. New project out, really gonna help you get to that bag. Whoa!